Good morning, and welcome to episode 110 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, February 15th, 2023. Over the past week, the precious metals have continued to trade in range, albeit with a bias to the downside. The most recent culprit feeding into that downside bias was yesterday's release of the January Consumer Price Index, or CPI. At 6.4%, the CPI showed no love on Valentine's Day to the precious metals complex. Although this was the first month-on-month increase in CPI in the past 5 months, it continues to be the 7th consecutive drop in year-on-year CPI, and most people feel that gives Chairman Jerome Powell and the Fed the pass they need to continue to hike interest rates to go ahead and try and tackle inflation. Let's take a look at the numbers over the past week for precious metals, and there was a pretty good downside move overnight. Gold down 2.4% since last week, trading this morning at $1835.90 an ounce from $1881.70 last week. Silver down 4.3% over the week, 97 cents, down to $21.56 an ounce from $22.53 an ounce last week. Platinum is down 6.1% to $935 an ounce this morning from $996. And palladium down 12.1% in the past week to $1,540 an ounce from $1,752 last week. Silver moved down further than gold, so as you would expect, it takes more ounces of silver to buy an ounce of gold. The gold-silver ratio is at 85.54 this week, up from 83.85 last week. And the US dollar is slightly higher at 103.50 on the index from 103.12. We'll see how this continues to shape up. As I mentioned, I want you to continue to watch the dollar and watch its impact on gold. Next major release is producer price increase or inflation, which we should see coming out tomorrow. I want to leave you with one thought, and I think it's valid. John Paulson, the billionaire philanthropist and founder of Paulson and Company, was out recently talking about the fact that he feels that gold going forward is going to be a much better value than the dollar. I tend to agree with that. You've heard me say that oftentimes. I'll give you a quote he's released here with a recent interview. There has been a significant increase in demand from central banks to replace dollars with gold. And we're just at the beginning of that trend. Gold will go up and the dollar will go down, and you'd be better off keeping your investment reserves in gold at this point. And that was Paulson in an interview with journalist Elaine Elkin. He went on to say that he thinks the prognosis going forward for gold is very strong, with continuing sticky inflation fears and geopolitical tensions. We'll see how that develops, but as you know, we're firm believers in gold. We do think the dollar has seen its better days in this recent bull market run, and we expect it to come down and gold to be the main benefactor of that. On sale, precious metals is the answer right now. Your gold is cheap. If you're not picking it up, I don't know why you're not. As always, we'd like you to go ahead and subscribe and like us on the YouTube channel. Send us your comments and questions. Subscribe to our newsletter, once a month information line, twice weekly, always something interesting alerts. Subscribe to our social media channel. But the most important thing I always want you to remember is that getting rich starts with keeping what's yours.